This episode's a little different. No visuals, no flashy edits, just pure sound. So sit back, relax, or throw this on while you're driving, working out, or winding down. Let's talk about what's next for XRP in 2026 and why this might be the most important year in its history. XRP enters 2026 standing on a changed foundation. In July 2023, U.S. District Judge Annalisa Torres issued a landmark ruling in the case SEC versus Ripple Labs. She held that programmatic, exchange-based sales of XRP did not constitute investment contracts under the Howey test and therefore were not securities, but that institutional direct sales by Ripple did qualify as unregistered securities offerings. That 2023 decision removed one of the biggest legal overhangs hanging over XRP, the blanket risk that all XRP sales could be treated as securities. With that risk significantly diminished, participants in the XRP ledger ecosystem and institutional watchers gained much greater clarity. The story progressed in 2025. In August 2025, Ripple and the SEC jointly filed a motion to dismiss their appeals, effectively ending the appellate litigation and making the district court ruling and accompanying fine final. While the foundation for XRP's future is now undeniably and firmly in place, the truth is, the biggest potential catalysts, the forces that could redefine its value and utility on a global scale, are still looming on the horizon. They are also, without a doubt, the biggest question marks. The road ahead isn't a straight paved line to new all-time highs. It's a complex, treacherous landscape of immense opportunity interwoven with significant, unavoidable risk. In this deep dive, we're breaking down the pivotal factors that will define XRP's fate in 2026. We'll explore the monumental bull case, from the institutional tidal wave that could be unleashed by spot ETFs to the relentless, accelerating march of real-world adoption. Then, we'll flip the coin and confront the bear case head-on, the regulatory hurdles that could still emerge from the halls of Congress, the ever-present competitive pressures from both crypto and traditional finance, and the macroeconomic storm clouds that could rain on the entire crypto parade. These legal developments triggered a shift, renewed institutional interest, growing filings for spot XRP ETFs, and fresh strategic partnerships, such as the recent announcement that Ripple will pilot a fiat credit card settlement system via its stablecoin RLUSD, together with MasterCard, Gemini, and WebBank. So yes, 2025 may very well have been the year where everything changed for XRP. It marked the legal transformation and the institutional baseline shift. But now comes the bigger question as we move into 2026. Was that transformation the main event, or merely the prelude to the real run? In 2026, the real arena begins. Implementation of institutional flows, global regulatory alignment, real-world settlement use cases, and token economics in motion. The stakes are higher, the players larger, and the pathways more defined. And yet the uncertainty remains. What's next for XRP isn't about whether the legal battle is over. It's about what happens now that the fight is behind it. Whether XRP will scale, institutionalize, and whether the market will reward it accordingly.
Well, thanks, Bill, for that introduction. My name is Mark, and I will take you further into what next year might bring for XRP. To truly grasp the explosive potential simmering beneath the surface for XRP in 2026, we have to start with the most powerful and immediate catalyst waiting in the wings: the launch of spot XRP ETFs in the United States. For years, investing in XRP for the average person meant navigating the complexities of crypto exchanges and the daunting world of digital wallets. Those technical and regulatory hurdles kept the vast ocean of mainstream institutional capital on the sidelines. A spot XRP ETF would abolish those barriers. institutions and retail investors alike could gain exposure to XRP via a standard brokerage account, just like buying shares in a company. We already have a powerful precedent for this effect. The launch of spot Bitcoin ETFs in the US triggered a flood of institutional capital and helped drive Bitcoin to new all-time highs. If a US spot XRP ETF receives approval, the same pipeline could open. In fact, several major asset managers, including Franklin Templeton, 21 Shares, Bitwise Asset Management, and Canary Capital, have submitted filings or are listed in the Depository Trust and Clearing Corporation Registry for Spot XRP ETF products. Recent analysis suggests that once the ETFs go live, first-year inflows could run into the multiple billion-dollar range upon launch. Putting that number into perspective, an injection of billions of dollars into XRP via regulated vehicles represents a massive demand shock for an asset of its size. That alone could shift supply/demand dynamics. And this is not just about price, it's about legitimacy. An ETF approval by the SEC would serve as a regulatory stamp of approval, telling cautious institutions, yes, XRP is mature, investable, and tradable via your familiar mechanisms. That transition could move XRP from speculative fringe into mainstream portfolios. The second pillar of the 2026 bull case is the solidification of regulatory clarity for XRP and the wider U.S. crypto market. The 2025 settlement between Ripple Labs Inc. and the SEC marked a milestone for Ripple, but broader regulation remains unresolved. In 2026, all eyes are on potential U.S. market structure legislation. Bipartisan drafts are circulating in Congress aimed at ending the turf war between the SEC and the Commodity Futures Trading Commission and crafting a clear framework for digital assets. A favorable law would amplify everything else. Imagine banks, asset managers, and corporate treasuries operating in a world where holding and transacting XRP is legally straightforward. Concurrently, regulatory momentum is also building globally. Europe's Markets and Crypto Assets Regulation Framework covers 27 member states, and key Asia/Middle East markets are moving ahead too, reducing friction for global adoption. The third and perhaps most fundamental pillar is a real-world adoption accelerating rapidly. While ETFs and regulation unlock potential demand, this pillar is about actual usage. RippleNet historically reports 300-plus institutional partners, but new moves suggest it's evolving far beyond payments. In late 2025, Ripple announced a $500 million strategic funding round at a valuation of $40 billion, backed by heavyweights such as Fortress Investment Group and Citadel Securities, signaling institutional conviction in Ripple's infrastructure play. Moreover, Ripple is building out institutional-grade infrastructure. A key part of this strategy is Ripple's own stablecoin, RLUSD. Its market cap has already impressively crossed the $1 billion mark, and corporate clients are actively integrating it for complex business-to-business payments. In a massive vote of confidence, longtime partner SBI Holdings has signed a landmark agreement to introduce RLUSD to the Japanese market, with a planned rollout in early 2026. Even more stunning is Ripple's new pilot program with MasterCard, Gemini, and WebBank to explore using RLUSD for settling credit card transactions. If this pilot scales from a test phase to full production, the XRP ledger could become a piece of critical infrastructure for one of the largest payment networks on the planet. This leads directly to institutional confidence. We are entering an era where major corporations are beginning to view digital assets as core components of their treasury operations. Underscoring this monumental shift, Ripple completed a staggering $500 million funding round in late 2025. This round was backed by titans of traditional finance like Citadel Securities and Fortress Investment Group, which valued the company at a breathtaking $40 billion. When this so-called smart money makes a move of this magnitude, it signals deep, underlying confidence in Ripple's long-term infrastructure play. Finally, we cannot afford to ignore the overarching macroeconomic environment. After a painful period of historically high interest rates designed to combat inflation, there's a growing consensus among economists that the Federal Reserve may begin a cycle of cutting rates in 2026. Lower interest rates traditionally make risk-on assets like cryptocurrencies more attractive to investors, often leading to fresh capital flowing into the market. If 2026 brings a friendlier, more accommodative economic cycle, it could create the perfect macro tailwind for a crypto market already primed for growth. When you combine the institutional floodgates of an ETF, the green light of regulatory clarity, verifiable demand from real-world utility, and a favorable macro backdrop, you have the recipe for a perfect storm. Now, for any analysis to be credible and useful, we have to meticulously examine the other side of the coin. It's incredibly easy to get caught up in the bullish euphoria, especially when so many positive catalysts appear to be aligning. But a smart, seasoned investor always considers what could go wrong. The path to a new all-time high for XRP is not a foregone conclusion. It is littered with potential roadblocks and serious headwinds that could stall its progress. The first and most significant risk is what we can call the regulatory boomerang. While we've outlined the compelling bull case for clear and favorable regulation, the opposite outcome is a very real and dangerous possibility. The legislative process in Washington, D.C. is notoriously slow, complex, and often unpredictable. What if the market structure bills were all watching stall in Congress, caught in partisan gridlock? Or worse, what if a version of a bill passes that is overtly hostile to assets like XRP, perhaps by creating onerous compliance burdens or reigniting debates over its classification? While the 2025 settlement provided clarity from the judicial branch, it doesn't stop Congress from writing new laws that could supersede that ruling. A renewed public standoff between Ripple and U.S. lawmakers would create a fresh wave of debilitating uncertainty, spooking the very institutional investors everyone is hoping to attract. Regulatory risk hasn't been eliminated. It has simply shifted from the courtroom to the legislative chamber. The second major headwind is the elephant that has been in the room for years: the Ripple escrow. The mechanics are simple. Each month, 1 billion XRP are released from a series of on-ledger escrow accounts. While Ripple often relocks a significant majority of these tokens, a portion is systematically sold on the open market to fund its operations, strategic investments, and acquisitions. The bear argument here is straightforward and potent. This creates a constant, predictable stream of sell pressure that can act as a persistent ceiling on the price. Critics argue that this systematic selling actively suppresses XRP's ability to have the kind of explosive parabolic runs seen by other assets that do not have such a mechanism. While the company maintains that these sales are a crucial and transparent part of its long-term strategy to build the network's utility, the short-term market perception can be a powerful drag on the sentiment and price action. The debate will continue to rage in 2026. Is the escrow a necessary tool for long-term ecosystem growth, or is it a ball and chain holding the price back? The third major risk factor is competition, and it is coming from all sides. Ripple and XRP are not operating in a vacuum. The prize they're chasing is a massive one, and they are far from the only ones with their eyes on it. On one front, you have the powerful legacy financial system. SWIFT, the very network Ripple aims to disrupt, is not standing still. It is actively piloting its own blockchain solutions and shared ledgers with a consortium of over 30 major global banks, including household names like JP Morgan, HSBC, and Deutsche Bank. Underestimating the ability of this incumbent giant to adapt, innovate, and defend its massive market share would be a grave mistake. On another front, there's fierce competition from within the crypto world itself. Other projects like Stellar are also laser-focused on the cross-border payments niche. Furthermore, the rapid rise of highly scalable blockchains and a proliferation of other stablecoins present an alternative vision for moving value cheaply and instantly across the globe. The narrative of XRP as the only viable solution for institutional cross-border payments is a powerful one, but it will be heavily tested in 2026. Finally, we have the dual risks of macroeconomic pressure and holder fatigue. The crypto market, despite its narrative of being a separate financial system, is still highly correlated with traditional markets like the tech-heavy Nasdaq. If 2026 brings an unexpected recession, a credit crisis, or another bout of stubbornly high inflation, institutional investors will likely flee from assets they perceive as risky, and crypto is high on that list. In that scenario, it doesn't matter how good the specific news is about XRP, it will almost certainly be dragged down with the rest of the market. This downward pressure can be dangerously amplified by a phenomenon known as holder fatigue. After years of holding through a brutal lawsuit and significant underperformance relative to other assets, it's understandable that some early long-term investors might be looking to take profits as the price finally recovers. If a significant number of these loyal holders decide to sell into the new wave of institutional buying, it could absorb a large portion of that new demand, muting the potential price impact. The bulls are betting on a tidal wave of new money, but they must contend with the reality of existing holders who might decide it's finally time to head for the exits. So, after breaking down the powerful forces on both sides of the ledger, where does that leave us for XRP in 2026? 2025 was the year the foundation was laid. It cleared the legal storm clouds that had been gathering for half a decade and set the stage for institutional finance to finally make its move. 2026, therefore, is shaping up to be the year of execution and validation. The outcome will be determined not by hype, speculation, or community hope, but by the tangible alignment or painful misalignment of these major catalysts. Let's synthesize this complex picture into a few potential scenarios for the year ahead. First, the A-base case. This is the scenario that many market observers see as the most probable. In this version of 2026, spot XRP ETFs are approved, but the initial inflows are steady and measured rather than the explosive big bang some are hoping for. The U.S. market structure bill makes slow, grinding progress through committees, but doesn't deliver a definitive, comprehensive framework within the year. Meanwhile, Ripple continues its steady drumbeat of execution, announcing new partnerships and seeing utility grow incrementally, but without a single game-changing announcement that captures the world's attention. In this world, XRP solidifies its position as a legitimate top-tier digital asset. We would likely see steady, healthy growth, with some analysts seeing a price target between $3 and $4.50 by the end of 2026 as a realistic and sustainable outcome. Next, the bull case. This is the perfect storm scenario where everything goes right. In this reality, spot XRP ETFs are a smash hit from day one, attracting billions in institutional capital at a shocking pace, replicating the success of the early Bitcoin ETFs. This tsunami of demand is then amplified by the passage of a clear and favorable crypto regulation bill in the U.S. by mid-2026, removing all remaining ambiguity for domestic institutions. To top it all off, Ripple announces a major scaling of its partnership with MasterCard or reveals new high-volume integrations with other major financial players. This flood of institutional money, total regulatory clarity, and massive verifiable real-world adoption, coupled with a favorable macro environment of falling interest rates, would almost certainly trigger a parabolic, euphoric move. In this scenario, the more ambitious price targets discussed by bullish analysts ranging from $5 to $10 come firmly into play. Finally, we must consider the bear case. This is the world where the potential headwinds we discussed earlier materialize into a harsh reality. The SEC finds new reasons to delay or even reject the spot XRP ETF applications, citing market structure concerns. The U.S. regulatory bill stalls indefinitely in a gridlocked Congress or turns hostile towards crypto. A competitor, whether it be a revitalized SWIFT or another blockchain project, gains significant traction and steals Ripple's narrative. To make matters worse, a global economic downturn grips the markets, causing a flight to safety. In this environment, long-term holder fatigue could quickly turn into outright panic selling. If this unfortunate sequence of events unfolds, a painful return to the $2 zone or even lower would be a distinct possibility, proving once again that no asset, no matter how promising, is immune to the powerful forces of regulatory roadblocks and macroeconomic gravity. 2025 set the table. 2026 is the year the meal will be served. The ingredients for an historic breakout are all there, but so are the risks that could spoil the entire feast. The final outcome hinges on the alignment of powerful forces, many of which lie outside of Ripple's direct control. The message for the coming year is simple. Stay informed, stay rational, and keep your eyes fixed on the signposts that will ultimately determine whether 2026 is the year of quiet consolidation or the year XRP truly changes the game forever.